Right, hello and welcome to Camel Finance. I'm your boy Camel, and happy Friday. What a week it's been. This year is going to be wild, and I've been telling you that for some time now. Now, before we go through this and what we've got in store for today, I want to quickly take a detour backwards a little bit, and I want to credit this to Mr. Unicorn. Mr. Unicorn pointed this out to me, and this is just one of the awesome things about having a community of traders. We potentially have found some hidden alpha, right? So I've written some notes here. Observation regarding Bitcoin cycles. I want to quickly touch on this observation, drives versus the V-shaped recovery, and potentially this new piece of hidden alpha that we may have just discovered, known as, I'm going to term it, the fake out failed cycle. So let's discuss this really quick. The reason I think it's important to point this out, you'll hopefully see in a second. So something that's very, very typical of cycles for gold and for the S&P is the two drives pattern. So this is where, as we're approaching the expected window for a cycle low to form, we often see a two drives pattern, which looks like this, right? We come down, counter trend bounce, roll over, undercut the original low, form a swing low inside the timing window for the expected cycle low, and out of this, we then confirm this as the cycle low and continue higher, often combined with some sort of trend line break here as confirmation. So if you've been here before, you will have seen me trade this exact setup multiple times on this channel. So this is the two drives pattern. Like I said, this is very, very typical price behavior of the S&P 500 and of gold. However, with Bitcoin, we typically don't see a two drives pattern into a cycle low. What we typically see with Bitcoin is a straight up plunge and a V-shaped recovery. Just having this piece of information gives us a little bit of an edge, right? If we're trading the S&P and we're looking to buy a swing low inside the expected timing window, then when we get a drive down and something like this, if it's slightly early, then the high probability setup is that we're probably going to come down and find an undercut. This is a hidden piece of alpha with the cycles. And similarly, just understanding that Bitcoin tends to do a straight up V rather than a two drives pattern is also a piece of hidden alpha. It gives you an advantage. It tells us that as we are coming into that cycle low, we should look for a V, a strong push off, a swing low, and hopefully combine that with a trend line break. So that's one piece of hidden alpha, right? Two drives in things like S&P and gold, and a V shape in Bitcoin. But we now have potentially found something, which is another piece of hidden alpha for the Bitcoin chart, something that will possibly be unique to this channel as well. So I'm very excited to show you this, and we're going to term this the fake out failed cycle. So just in case you're unfamiliar with the failed cycle, this is how it works, right? We get a cycle low form, something like this, and then what we would typically expect to see is price trade above that cycle low. If, however, price is to come down and close a daily candle below the cycle low, we call this right here a failed cycle, and it tells us to expect the upcoming cycle low to form below this one back here. A textbook example would be something like this, lower low, and then go. So that is what the failed cycle tells us. The failed cycle is defined as a close below the prior low, and if we get one of these, like I said, it tells us to expect the cycle low that is upcoming to form below the prior cycle low. Typically speaking, I don't see failed daily cycles that then resolve with higher lows. Normally, whenever we see a failed cycle low, it is a surefire thing, as surefire as it can be, of course, in markets, because nothing is ever guaranteed, that we will get a lower low printed. However, if you've been following the content, you will be well aware that of late, we have just had a failed cycle back here, right, where this low closed below the prior cycle low, which told us to expect the next cycle low to form below this low from back here, and instead we got a higher low and then a strong push off for Bitcoin. And this, of course, leaves us with a problem to solve, as I was saying in yesterday's video. That's why we've got so many question marks on these potential cycle counts, and we're going to end up either accepting this one and rejecting this one and this one, or vice versa. So that is a problem we are currently looking to solve. I suspect what we're going to end up doing is scratching this one off and having a normal cycle count from here and here. That is to be determined. But the point I'm trying to make here, going back to, did we just discover some new alpha? Because, as Mr. Unicorn pointed out to me, that we may have just discovered this thing that is unique to Bitcoin. Just how the V shape out of the cycle low is unique to Bitcoin, and just how the two drives pattern is unique to the S&P and gold. It apparently is the case that Bitcoin likes to print these fake out failed cycles, something that I am unfamiliar with seeing in any other asset class. So let's assume that that's what this is, a fake out failed cycle followed by a legitimate cycle low and a confirmation of a resumption to the upside. Well, shouldn't we have seen this before? If this is characteristic of Bitcoin, shouldn't we have seen this before? And the answer is yes, we should have. And not only should we have, we actually have seen this before. Because take a look at this, right? Whether you use this cycle low or this as the cycle low, right here, we had a fake out failed cycle that then resolved to the upside with a consolidation cycle, net sideways before a timing-based cycle low occurs and we push higher. So just like we've just had at the hard right edge, right here was apparently a fake out failed daily cycle. And again, this might be something that is unique to Bitcoin. If it is, then it can tell us that if these fake outs show up halfway through the cycle for Bitcoin, that unlike regular cycles, like I said, that tell us to expect to see a lower low form below the prior cycle low, maybe when we see this with Bitcoin, we can start to adapt to this and say, well, I wonder if what we get instead is not necessarily a lower low, but instead an equal low or even a higher low. And not only that, but if we zoom in to the bear market bottom, right, this is the FTX collapse from back here, you can see that we had, again, a cycle low back here on the FTX collapse. We then came down and printed a fake out failed daily cycle that then resolved with another one of these consolidation cycles and resumption to the upside. So it appears to me that what we might have is something very unique to Bitcoin, right? Something like this, which I've never seen in any other asset class: cycle low, fake out, failed daily cycle. So let's keep this in mind. This is why I love having a community. This goes to show that the community can provide alpha. This goes to show the importance of, if you spot something, to let me know in the comments. This also goes to show the importance that we don't just form one of these communities where I never listen to anyone or I just delete all the comments that I don't agree with. This is why it's important to have open discussion. So thank you to Mr. Unicorn for pointing this out. And I think what was the most prudent from here on out is that we keep in mind that if Bitcoin is to print a short-term failed daily cycle like this and quickly reverse, then it might not necessarily do what normal cycles do, which is roll over. And we should, in theory, at least keep this in the back of our minds that we might see this fake out failed daily cycle. So a piece of alpha there. We've seen it at least 3 times before. Like I said, worth keeping in mind, because I think what we just did was unlock some brand new alpha for Bitcoin. So ending the week with a bang. Like I said, happy Friday. What a week. This year is going to be wild. And I've told you so many, many times. Believe me, it is just getting started. In today's episode, I want to go over some nice charts for you. We're going to check in on inflation and rates, although we're going to save the bulk of that for tomorrow's deep dive over the weekend, as always. And then I want to touch on a couple of charts and new positions and explain what's going on there with the crypto-related equities particularly. So number one, I want to kick things off with this chart that is pinned on my Twitter profile from back in April. Is this still possible? Okay, now granted, we are slightly behind schedule. So we are somewhere in, where's the price? 45K. We're somewhere in this neighborhood right here. Okay, roughly speaking, this is where we are. So we've done something more like this. But is it indeed possible? Are we going to enter this parabola? Are we going to confirm our second angle of attack? Are we going to hold that, do something like this, and continue higher before setting that third angle? I don't know. But so far, it is not yet invalidated. Now, that doesn't mean that we couldn't, of course, base here and have a much later and more normal cycle shape for Bitcoin. But as it stands, we cannot rule out this parabola just yet. Tony the Bull here showing that there is nothing bearish about Bitcoin above the upper monthly Bollinger Band. So this looks pretty good and tells us to keep an open mind about better than expected outcomes walking forward. Going back to this whole thing with the community, Kemosabe here has potentially unlocked another piece of hidden alpha with this 106-day cycle. So take a good look at this, pause your screen, zoom in, have a good look at this. If I zoom out on my chart, you can see I've added the 106 markers in line with where Kemosabe's were on his chart. And it's going to be really interesting to see if indeed these can provide additional context. What's most interesting is out of the current low. So you can see the low that we just put in, that is potentially the fake out failed daily cycle for Bitcoin, is also coinciding with a 106-day timing band. So I wonder if that means we've got some very, very bullish things over the coming 106-day cycle. And again, it shows as a community we continue to get stronger. Bitcoin has triggered a buy on the 1-month super trend. So it needs to confirm this with the close of February's monthly candle. But if it can do that, then again, it's another chart in our favor of expecting very good things to happen to the price of Bitcoin walking forward. Not only that, on balance volume is now making a new high. Every other time it's done this, Bitcoin has gone on a parabola, right? You can see that here at the bottom. OVV breaks out, on balance volume breaks out. On balance volume breaking out again every single time tells us to expect a parabola for Bitcoin. Something that's a bit different this cycle is Bitcoin continues to outperform ETH. So pretty interesting, right? It's pretty interesting. And something slightly less surprising is that Bitcoin priced in TLT, okay, Bitcoin denominated in long duration bonds, is now hitting fresh all-time highs. Again, pause your screen, let that sink in for just one moment. We also have this from Plan B, which is quite nice, okay? Realized prices are all increasing, and Bitcoin is above all of them. This is, of course, bullish. The 5-month realized price is currently sitting at 40,000 US dollars. And this is the key point here, right? It acts like a floor for the dips in bull markets. This is denoted by the red arrows. So in theory, at least according to this one metric, never below 40K again. Now, in fairness, we were entertaining this as an idea not too long ago, and we did, of course, get that fake out failed daily cycle. I wonder if this is the time that we are for real. I also showed data that said that we should never, in theory, go below 35K again. Now, before you come at me, I held my hands up then and said, I don't necessarily agree with it, and I know it is the touch of death to say things like never below X price again, because usually when you do, we trade below that price within a couple of weeks. But data is data, and here is some data for you. So take a look at this. In theory, never below 40K. Again, remember, we're less than 3 months now from a halving. When that halving occurs, we're going to have an average break-even mining price of around 36K for Bitcoin. That means the average Bitcoin miner will need $36,000 Bitcoin just to break even. So is it unfeasible? Is it completely infeasible? Infeasible? Unfeasible? Pick the one that's correct. Is it not feasible that we could never trade below 40K again? I don't think so personally. Then again, I am more bullish than most. In other news, the ETFs are starting to do ETF things, which I like to see, okay? Assets after 1 month. So if you have a look at the top 25 ETFs by assets after 1 month on the market, out of a total of 5,500, over 5,500 over the past 30 years, IBIT and FBTC are in a league of their own. So this is, of course, BlackRock and Fidelity's Bitcoin ETF. There is demand underlying here. There is demand that could send the price significantly higher. Not to mention, BlackRock and Fidelity now hold around $6.4 billion of Bitcoin. This is around 3% of the supply, if my maths is correct. And this only represents a 0.04% Bitcoin allocation relative to the assets under management for these two entities. So we've got a long way to go before 1%, 2%, and 5%. If we can get anywhere near that 5% number, you better believe the price of Bitcoin is going to be significantly north of where it is today. So what a time to be alive, right? What a time to be alive. I wanted to quickly pop into rates, but I'm not going to spend too much time because we'll do the deep dive tomorrow as always. For now, it seems that pause is the most likely thing at March's FOMC, right? They've seemingly taken the cuts off the table in March's meeting. And interestingly enough, when we click out to May, they are slowly but surely repricing in favor of seeing a pause in May as well. Now, that's fine, right? Because the longer we remain paused, based on historical data, the longer we can expect this bull market in the stocks to continue. The longer we can expect the bull market in the stocks to continue, the more likely I think it is that we see risk appetite improve enough to send Bitcoin higher. So I don't mind being wrong about something breaking mid-year and forcing cuts early. I would rather be wrong about that and see this thing continue to run higher. However, as you all know if you've been on this channel before, the likelihood is that we are slowly but surely swinging towards deflation. The likelihood is that this hard right edge, this third and final leg down that is going to continue to be priced in more and more aggressively, is going to show up at the CPI print next week. And once we see that CPI with a 2-handle in front of it, the likelihood is that we start to see cuts taken back off the table for May, and possibly we start to see them taken off of the table for March as well. So it's going to be interesting. Like I said, I'm going to save the rest of this idea for the weekend's analysis. Whilst we're talking about rates and inflation, I just wanted to share this with you, okay? Because, as always, right, there's always some people that come at me and they say, look, CPIs will make believe, all the metrics make believe. Yeah, I agree, right? It's not like I don't know that. In fact, I have a video called something like CPI, where I show you how they manipulate the calculations. One of the early days videos I put out on the channel. So yes, I'm aware they manipulate the data, right? But overall, you have to have something to go off, right? You have to have some data, whether it's real or not, right? This is the data that's out there. This is what we have to use. And overall, it's not the number that I really care about. What I care about is the trend, right? I've said this multiple times. Anyway, maybe I am right about this, but we're going to end up being stuffed somehow. Maybe they're going to shaft us by changing the calculations. Take a look at this, okay? Read this. Each year with the release of January CPI, seasonal adjustment factors are recalculated to reflect price movements from the just completed calendar year. This routine annual recalculation may result in revisions to the seasonally adjusted indexes for the previous 5 years. Recalculated seasonally adjusted indexes, as well as recalculated seasonal adjustment factors for the period January 2019 through to December 2023, will be made available on Friday, February 9th. That is, of course, today. The revised indexes and seasonal factors will be available on this page. CPI can be contacted after 8:30 on the day of release to obtain updated seasonal factors. So what does this mean? Does this mean nothing? Or does this mean they're about to manipulate this calculation once further? Are they going to try to hide deflation? Are they going to try to make deflation seem like it was worse than it was before? Are they going to try to make inflation seem like it was not as severe as we've been led to believe? Who really knows? But this may be a non-event, or it may well throw a spanner in the whole hypothesis. That's going to be determined, of course. I'm going to be having a look at this data and seeing if we can learn anything along the way. And as always, we'll be coming back over the weekend, as I've said, to discuss this in a deep dive fashion. But apparently they just cannot help themselves. They're addicted to selling us lies, aren't they? So with that said, what's happening in the charts? That Bitcoin is doing Bitcoin things, right? This certainly, I'm leaning on the balance of probabilities that this is a fake out failed cycle. This is our new favorite term. That means we're probably going to accept this right-handed count, not this one. And we'll see what can happen, right? We will see what can happen. The reason I lean on the right-handed count and not the early count is because the crypto-related equities are confirming that, right? They had the correct shape, the correct time, and now they're starting to look, this at the hard right edge is the hallmark of leaving behind a new cycle. So long as we can continue to follow through, I am happy to say that it's most probably the later count that is correct, and that indeed was a new fake out failed cycle. As ever, one day at a time. There's not much to say about the stock market, right? They continue to push up. We continue to push the longs, and until they break down from the upward sloping red support line, then there's no reason for me to exit the trades just yet. The Russell 2K, look at that. Okay, good. Starting to see breadth widen a little bit. I'd like to see this considerably north of here. I'd like to get back above this high from back here. If we can do that, happy days, right? But for now, still relatively weak. Oil looking like it's leaving behind a new daily cycle, so that's to be expected. But can this thing roll over in the coming days and trigger a short if it can break down from this upward sloping red support line? Perhaps. Gold, same deal, right? Still looking for shorts, although perhaps slightly premature at this moment in time. Here's the dollar, so still kind of expect to see a deviation into CPI and then a rollover. That is to be determined. Other than that, the ad on MicroStrategy looks great. I'm yet to add Riot and Marathon, and I know you might be thinking, well, why didn't I add out of here? And it's only because if I was to add out of here, for example, okay, then I haven't really got enough profit from the first trade to finance the risk on the second trade. I would need my stops somewhere in this neighborhood. And so I was just thinking maybe the best and most prudent outcome here, because remember, I'm interested in increasing my total exposure without taking additional risk here. That's why I haven't taken the profit up here. That's why I'm pushing these trades. So I think what I want to see ideally is a pullback, something like this, and then a breakout, and then I can get in slightly higher, but I can justify having the stop below that swing and moving the stop up from the first to the second. If not, if we're going to break out from higher up for Riot, perhaps we're going to do something more like this. Then maybe out of here, that would be a nice place to get long, and the trade can look something like this, and then we'll move the stop up from the first underneath the second, and thus we would have doubled the exposure without taking any additional risk. So I'm playing patient with Riot, but only because, like I said, we haven't got a great deal of profit to allow to finance the risk on the second trade as of yet. And for Marathon fired off yesterday. I know a bunch of the members are really happy with this trade. I'm still kind of expecting one of two outcomes here. Similarly for Riot, either we're going to do this, and if we do, then we'll add the long, and it will look something like this, I guess. And then again, we'll move the stop up from the first position under the second. We will have doubled our exposure without taking any additional risk. Or if we don't get this yellow squiggle play out, the other option is that we get a rejection at resistance, maybe a little pullback, and then we break out from somewhere in this neighborhood. And of course, then at that point, it will be fine for me to add this and move the stop up again. So either way, I mean, I've been very consistent in this game plan, right? This game plan has been known for a long time. I've demonstrated the patience. When we were in here, people were calling me crazy, and I was saying, no, you don't get it. It's not like I'm choosing to hold on for dear life and hope the thing bounces back. This was always the strategy, to try to add more exposure, because I believe that we are potentially going to be moving into one of these parabolic blow off tops. And if we are, I want as much exposure going into that without taking additional risk. So the strategy is the same. I've added to Coinbase. I've added to MicroStrategy. Happy days there. Looking to add to Riot, looking to add to Marathon. Like I said, the way I'm going to do that is we're either going to see rejection at resistance and then add the position, or we're going to break out. And if we break out, then we can talk about adding the position. Same for both of those. So that's it from me. What a week. I told you this year's going to be wild, and believe me, we've seen nothing yet. Make sure you come back tomorrow for the deep dive. As always, Fingers crossed that CPI calculation adjustment turns out to be a nothing burger. It'd be really annoying for me personally to have read the situation and made the call correctly, only for them to change the calculation and throw a spanner in the mix and make it more difficult for me to decipher what's going on. But as ever, we just take it one day at a time, right? We do what we can do. And it's not about being right or wrong. It's just about staying on the right side of the trade. So I'm sure we'll continue to do that, no problem. Other than that, I hope you're doing well in life. I hope you got some nice weekend plans. And until tomorrow, take care from me. All the best. Cheers. Bye.